Welcome to this deep dive for the Modern Investor series of the Royal Krakow Mint's Precious Metal Show. Today, we are looking at something wild.
Yeah, it's a massive shift.
In March 2026, the world's ultimate safe haven,
Mm.
gold, bled tens of billions of dollars.
Right. Well, Bitcoin basically pulled those exact billions right in.
Exactly. So our mission today is to decode this shift and how modern wealth is stored across physical gold, ETFs, and crypto.
It is a fascinating dynamic to watch.
It really is. I mean, looking at this data, I'm honestly a bit confused. Like, okay, let's unpack this. Are we making a huge mistake by treating these assets as competitors? Like picking a favorite sports team instead of, specific tools for specific jobs?
I think we absolutely are. To understand these tools, we really have to look at what institutional money is doing right now under immense pressure.
Because during recent geopolitical tensions, Bitcoin actually held up better than gold, right?
Well, better than paper gold. We have to separate the actual metal from the paper tracking it. Those billions bleeding out, they weren't physical bars leaving vaults.
Oh, they were the gold ETFs being liquidated.
Exactly, because an ETF is really just a financial layer. It's mapped to gold, sure, but it's subject to the exact same liquidity cascades as any equity during a margin call.
Wait, so if paper gold gets dumped in a panic like that, doesn't that defeat the entire purpose of holding a safe haven asset?
That's the ETF illusion. When a true panic hits, institutions desperately need cash. They aren't selling the ETF because they suddenly hate gold.
They sell it because they can.
Right. It's highly liquid. Often it's the only bid left on the screen when the rest of the market completely freezes up, sometimes dropping over 15% in just days.
Wow. So the very liquidity that makes an ETF attractive makes it completely toxic during a crisis.
Yeah.
It's like buying fire insurance from a company that is guaranteed to go bankrupt the second your house catches fire.
That's a great way to put it. And because ETFs fail as an absolute insurance policy during panics, investors are forced to weigh the oldest form of money against the newest.
Which explains the crazy retail demand for physical gold right now.
Yeah, people want that absolute sovereignty.
Right. Despite having zero yield and the total friction of having to securely store it.
But see, that friction is the feature. You take physical possession and there is zero system dependency.
Here's where it gets really interesting, though. If physical gold is your concrete bunker, the data shows institutional money is treating crypto as like a high-speed escape pod.
The escape pod analogy is perfect for the current mindset. Crypto operates completely outside that traditional financial layer.
Unlike gold ETFs, which are tied to banking hours.
Exactly. Centralized systems halt trading when things get ugly, but Bitcoin trades 24/7 on a global, decentralized ledger.
Giving you immediate liquidity no matter what the banks are doing.
Right, and it tackles currency debasement while offering asymmetric growth, even though, its volatility over the last decade is way higher than gold.
Which fundamentally changes how you build a portfolio. I mean, you don't take your concrete bunker into orbit, right? And you don't use an escape pod to weather a ground assault.
They do entirely different things. The smartest strategy doesn't just choose one. The biggest mistake you can make today is expecting a single asset to provide security, liquidity, and growth all at once.
So it's about balancing them.
Exactly. You balance physical gold for off-grid security, ETFs for standard liquidity, and crypto for that growth potential.
Well, that leaves us with one critical question for you to ponder before we wrap up. If institutions are rapidly trading their paper gold for digital gold right now, what happens to the price and availability of physical gold if a true crisis hits?
That is the million-dollar question right there.
Right. Imagine if the system breaks and everyone suddenly decides they need to enter their physical bunker at the exact same time.